All right, welcome guys. Welcome to chapter 7. Today we're going to discuss managing of cost of labor. We're going to be using the Wiley Plus Food and Beverages Cost Control 7 editions. So we're going to discuss a few chapter outline here. First is labor expense in the hospital industry, evaluating labor productivities, maintaining productive workforce, measuring current labor productivities, managing payroll costs, as well as reducing labor-related costs. What is the payroll? Payroll is the term. In terms of labor expense, the industry, payroll is one of those terms that you need to know. Payroll is the term used to refer to the salaries and wages paid to the employees. Fixed payroll most often refers to the amount of a person pays in salary. Variable payroll consists primarily those dollars paid to hourly employees. Okay, if you are an hourly employee, you're going to be paid based on the variable payroll. Labor expense includes salary, wages, but it consists of other related labor costs as well. So they, in terms of salary, employees receive the same income per week or month regardless the number of hours worked. Remember, in Canada, it's biweekly in terms of payment of your payroll. Okay, usually it is outsourced to a company called Ceridian or ADP. These are third-party vendors that usually manage payroll for many companies here in Canada because payroll is quite complicated, right? And it requires a lot of detailed data entry as well as correct deductions. Exempt employees are those because of their leadership responsibility and the level of decision making are exempt from overtime provision, such as federal government. Exempt employees do not receive overtime payment if work in excess of 40 hours per week. I remember I used to work for another company called Royal Alliance when I do overtime over than 35 hours. Let's say 36 or let's say 41 or 42. Sometimes I don't get paid because I was a white collar professional job. Labor expense in the hospital industry, payroll is considered controllable. Labor expense, unlike fee taxes, insurance premium, other labor expenses such as taxes and subsidies over which manager has little or no control, are commonly called non-controllable labor expenses. So, in terms of productivity ratio, are always to assess labor productivity. So the logic here is output divided by input. You got the productivity ratio there, okay? Productivity ratio. So in terms of maintaining productive workforce, there are 10 key factors affecting employee productivity. First, employee selections and training, supervision, scheduling, and breaks. Okay. Next one will be morale, menu, convenience versus stress preparation, equipment or tools, and service level desired. In terms of maintaining productive workforce, job description is a listing of the tasks that must be accomplished by employee hired to fulfill a particular job. Job specification is a listing of the personal characters needed to perform the tasks contained in job descriptions. Employee turnover, which is separation, is a term used to describe employees who have either quit voluntarily or been terminated involuntarily. Number of employees separated divided by the number of employees in workforce equal to the employee turnover ratio. I remember when I used to work for Walmart, one of the store in Burlington, that's the high turnover rate for all the employees there, especially the hourly workers, because the pay is quite low, about $15 to $16 an hour, while the market rate for the retail is about $18 in Costco or Amazon. Maintaining a productive workforce in terms of productivity, the more kitchen is asked to produce large variety of menu, such as complex item, the less efficient the kitchen will be. Okay? The decision of whether to make or buy many items involve two major factors, which is number one is product quality, number two is product cost. The convenience food maintaining productive work costs, convenient food use versus the excess preparation. Example, using the bin seasoning, labor, and fuel. Here is the cost of convenience of a product. Here you're going to see convenient is going to be $52.40, while the cost of scratch product from the beginning, $68.40. So it gives you a comparison between two costs in terms of product. Okay. And then measuring current labor productivity, labor cost percentage, cost of labor to total sales equal to labor cost percentage, while sales per labor hour is total sales divided by labor hours used equal to sales per labor hour. While labor dollar per guest service is cost of labor divided by guest served equal to labor dollar used per guest served. In terms of gas served per labor dollar, gas served divided cost labor equal to gas served per dollar labor, while gas served per labor hour equals to gas served equal to labor hours used, which is gas per labor hour. Revenue per available seat will be revenue pass, revenue divided by available seat per hour. So this is going to give you an example of the measurement here. Left side, the advantage and disadvantage here. Labor cost percentage, cost of labor divided total sales. Advantage will be easy to compute and mostly widely used. Disadvantage is that it have heights and low, and varies in terms of change in the price of labor, and varies with changes in menu and selling price. While the sales per labor hour is the total sales divided by labor hour used. It's very easy to compute. It does not vary with changes in the price of labor. In terms of advantage. In terms of disadvantage, it ignores the price per hour paid for employees divided by a variety of changes in menu selling price. By labor per dollar per gas served, cost of labor, these are the benefits, fairly easy to compute, does not vary in changes. In terms of menu selling price, can be used by non-revenue generating income. Ignore, in terms of the advantage, it ignores the average sales per gas and total sales and varies with changes in the price per labor. So in terms of productivity gains here, we're going to see gas per served per labor hours, gas served per labor hours. The same thing in terms of advantage you will see here, disadvantage you will see here. Gas per labor is also here on the left side, disadvantage on the right side. And RAF pass revenue on the left side, revenue divided by available hours is on the left side here, and the right side here in terms of the disadvantages. In terms of measuring current labor productivity, many of us prefer to compute their productivity measured in terms of daily rather than weekly or on a monthly basis. This can easily be done by using 6-column form that record cost and labor cost, cost of labor, sales, and labor cost percentage. This will give you an example of current labor activities in terms of cost of labor, in terms of sales, and labor cost percentage. So, for all the productivity except RAF pass, operator may evaluate productivity by labor, subcategories such as production, service, sanitation, and management. Labor productivity measure each labor for each subcategories can be actual or be estimated for the futures. So, what is the things in managing payroll cost? The first step in payroll cost management, number one, determine productivity standard. Number two, forecasting your sales volume. Number three, schedule your employees using productivity standard and forecast the sales volume. Number four, analyze your result. In terms of step one, you determine productivity standard is defined by management view what constitutes an appropriate productivity ratio in a specific food service operations. Productivity standard represent what managers should probably expect in the way of output per unit labor. Example, productivity standard, if you are in Tim Horton, you are taking order for the drive-by, is you are expected to perform less than, let's say, 2 minutes for every order taken. Forecasted sales volume is when combined with sales or productivity standard volume forecasting allows a food service operator to determine the number of employees needed to effectively sales operation expected number of guests. Okay, for example, during lunchtime, you're going to hire lunchtime and dinner time, as well as weekend, such as Saturday and Sunday, there will be more guests coming into the restaurant. You're going to increase your waiters, as well as personnel in your kitchen. In terms of step 3, schedule your employee using productivity standard and forecast in terms of sales volume. May combine sales forecast with productivities standard for better estimate and control the labor cost. Step 4, analyze the real result. Basically, actual amount divided budget amount. You got a percentage of budget. So this is the step 4 that you have been mentioned in terms of managing your payroll costs. In terms of reducing, you have a fixed cost. Fixed category here, improve productivity, actions, increase sales volume, combining job to eliminate fixed positions and reduce wages paid to fixed payroll employees. In terms of variable, you need to improve your productivity, schedule appropriate to adjust changes in sales volume and combine jobs to eliminate variable positions, and therefore reduce wages paid to variable employees. In terms of reducing related to labor costs, one way to increase productivity is to reduce related expense through employment empowerment. Managers often find the offering well-planned, consistently training program and empowering employee will result in loyal, committed workforce that is productive, supportive of management, and willing to go extra mile for guests. A good example is you give them a good remuneration package, give them empowerment, and give them a percentage of the profit sharing, such as tips, such as any other benefits. They're gonna more likely stay with you, and in the long term, if they can multitask, that will be much more benefit to your organization. So that basically concludes this chapter. Hopefully, it will be offered as well in YouTube as well as in at Puzzle. Thank you.